Welcome back to the International Wealth Builders. This is your host, Marie Antonette Waite, and we have our guest, Laleh Hanks, who is the real estate broker of the America Choice Mortgage. And she was just sharing her ways of making sure that the people are comfortable in sending the information to her, because a lot of us are, sometimes we have this anxiety about providing our information to someone that we don't know. And so, Lali, you want to expand that answer that you gave us in regards to, sending the information to you?
Sure. I mean, most professional lending institutions, they're not going to ask you to email documents, but you certainly can take some measures to, protect that if you choose to send documents that way. We use a bank level encrypted server called Dropbox. That works for us because just the borrower is invited to a shared folder. But sometimes that can be challenging. Maybe I'm working with a roof contractor and they're not sitting at a computer all the time and it becomes frustrating. We'll meet with the client sometimes in person, especially if we have somebody that's maybe a senior and they're just a little timid about sharing, electronic documents or, being taken advantage of. So we try to, acclimate to what our clients' needs are. But I truly believe that, Dropbox is the safest way for us to get that information. But if they do email it, I recommend you delete it after sending it so it's not sitting on your server. One measure that people are always concerned about is I don't want to run credit. And obviously, if you want an accurate quote, credit is one of the most, pinnacle pieces of, data that determines what you qualify for. So it is really important, to have the right scores. And unfortunately, when you look at your Credit Karma, or maybe you have a bank that shows you your credit score as a courtesy, those scores don't really line up with a mortgage tri-merge. So we use what's called iSoft Pool, one of my friend's companies, and that allows us to check exactly what the score is, see what the debts are and the payment history without a hard inquiry. It's called a soft inquiry, which means it doesn't show up. But you are allowed to, within 30 days, without having much hindrance, have a mortgage, report pulled. And if the score is really high, like, 780, odds are it's not going to budge. What
Okay.
really pushes a score down and jeopardizes, that where people are concerned, I don't want to run an inquiry, is, asking for credit cards, left and right. Or if your score is in that 600 range, it may impact you a little bit more. Maybe it'll move down 5 points if you do it too much, or 10 points. Where somebody with 800, it probably won't even flinch. So I don't know exactly what that formula is, but we don't like to spend, it costs us $45 to $50 to run credit. So we actually do that last.
Okay.
After we look at the soft pull score, or if the borrower has a recent credit report, we're happy to quote and start looking at items with the hypothetical situation. But sometimes you can tell somebody they don't qualify, or they can make a decision off of something that's not accurate. So I do recommend, if there can be serious benefit or goals, that you do get a full credit report at some point. We generally do it after we qualify for income. Because it wouldn't make sense for us to, run it out the gate and then you find out, oh, they actually don't have a job, or, oh, they, this is half the income we need. We wasted an inquiry, we wasted $50, we wasted time. So, our methodology, our method is to do that, after we've qualified the income.
Okay. How do you feel about the people that are shopping and they're going from one loan officer to another officer?
Yeah, well, I do think it's a good idea that you talk to 2 or 3 loan officers. I think with any major investment or purchase, you should interview, whether it be a CPA or accountant, or, whether you're going through a divorce, always talk to a few. You're going to learn something. You're going to learn what you like, what you don't like. And sometimes it's just a relationship, and you might have 3 people that are just as qualified. Just keep in mind that, someone really, even though there are rules in place that can keep people from, they try to keep people from misquoting, but rates change every day, sometimes multiple times a day. So if you are shopping for a home, you can work with 2 or 3 lenders. I would recommend finding the lender that's going to help you stand out to win the escrow. One of the methods that we follow, as soon as I work with the agent as a team, we don't do a pre-approval letter, we do a pre-approval package. We're going to include a cover letter, of course, that they've been pre-approved. We're going to, edify them. We're also going to include their credit scores without, personal information on it. We're going to provide the assets that are needed for the down payment. And in some situations, we might run what's called an AUS, or automated underwriting system finding. And that just stands out. One buyer comes in with just a letter, but we came in with a package, edifying our borrower, that they're going to be a great addition to the neighborhood, and that they're strong. And not only are they strong, but I've been doing this for 20 years, not 20 months. And we have all the documents ready, current, so that we can get out the gate right away. Because that's what everybody wants. They don't want to waste time if they're going to trust somebody to buy their home. I don't want to start gathering paperwork or teaching somebody how to download a PDF after they're in escrow. We want to get all of that painful paperwork process. I call it like the sit-ups at the gym. Like, that's not the fun part, but it's the most important part. And we want that done before they, make offers onto a property, because if they go into escrow, they're going to need to do the inspection, and they're going to want to focus on that home, not their loan.
Okay. So you understand exactly what the escrow is looking for to make it a win-win situation for everyone.
I understand what the listing agent's, doing, and the listing agent wants to protect, the seller, and they want to make sure that their reputation is strong and they're not wasting their seller's time, and time is money, because they may be paying, a mortgage on that, or they may be buying another home. And if you go into escrow with somebody that's really doesn't have all their ducks in a row or documents in a row, you're really, setting yourself up for risk of losing that and having to start all over again.
Okay. Now, do you see yourself kind of guiding some of your clients in regards to really building their wealth as a whole, not just, as a one transaction deal?
Yeah. Absolutely. I think one of the most important things is I'm educating clients, because there's a lot of myths or, misunderstood, phrases or ideas in the industry. Paying points is one of them. There's a very simple calculation to determine how quickly you're going to return that investment. So points are tax deductible, and on a purchase, you can write them off right away. You don't have to amortize that. So most people are sitting in a position where they can write off anywhere from 25 to 33% of those points. So just for easy numbers, let's say they have $10,000 in points, and that $10,000 drove the interest rate down by maybe 0.5% or 0.75, right?
Mhm.
That's going to drive the payment down, and it's going to allow them to pay the principal down faster within their amortization table. So if you add those two pieces together and divide it into that net cost after tax deduction, you can get your month's return on investment. So in many cases, I can return, like I have a client right now, he's paying $20,000 in points, but that's going to return to his pocket or in his equity, one way or the other, within 13 months. So if he doesn't have a plan to sell the property or refinance, until after that point, that's a sound or a smart investment.
Wow.
So a lot of loan officers just don't even go there. They don't know how to teach that math, and people are taught, I want a no point loan. That's what the banks want you to do. That's not what serves you best.
Oh, wow. Okay. Well, that's very good information for people to learn. Let me ask you, I know that you have done this book, On the Road to the American Dream. What is this about? What is this book going? Is it totally related to what you're doing with the people that you're serving?
I don't know if you can see it, but
Yes.
it's called, Road to the American Dream, What They Forgot to Teach You. And, like I said, I was in college to be a pediatrician, so I was taking some pretty serious classes. I was in college for 3 or 4 years before I got into sales. And, I knew nothing, and people are still doing the wrong things. For example, paying down principal early or making biweekly payments on a fixed mortgage. It should be considered predatory lending. It should not be allowed. It really only serves the bank, and it puts you in a hardship. I do believe in taking that money maybe pre-tax. That way, increase maybe what you're investing into your pre-tax accounts like retirement or 401k. Let that grow, and then eventually, whatever you would have paid extra to the mortgage is actually going to be larger, and then pay the mortgage off in full. If it's a home equity line of credit, that recasts similar to a credit card, daily or monthly. That's different. You can pay that down and directly be impacted by what you're paying on interest. But on a fixed 30-year fixed mortgage, which is what most people have, paying extra to principal, be it 50 cents or 50,000, you're really just making the bank more secure. And heaven forbid there be an accident, a flood, a roof issue, or worse, a hardship health-wise, between COVID and cancer and all the things that we face. I was in a car accident. I got hit head on 55 miles an hour. It took me a year of, 3-4 times a week to go to rehab, and that affected my income. But if, and I went through my savings, going through that. If I had put all those savings in the mortgage thinking it's going to get me somewhere, I would have been in real big trouble, right? Because I wouldn't have had the money to pay my mortgage. And I promise you, the bank won't care that I was in a car accident. They will take that home. So I really encourage people to not do that. And it's
Okay.
unfortunate because it's just like an old school method. I think even like Dave Ramsey and Susie Orman and those people, they preach that kind of thing, and it's just not accurate. And I can't believe banks can actually encourage it, because it's like predatory lending to me. But back to the book, in a sense, one thing I like to do is break some of those myths and break it down to try to explain what better options there might be. Because I commend people for that responsibility and that diligence, but they need to do it a different way. Otherwise, they're really creating risk and potential hardship for their family. I also found that people have the same questions. After doing the business for about 5 years, I was like typing the answers over and over again. They might ask, do I want to impound account for my taxes and insurance? Or I'm refinancing. Do I have to make a payment during the refinance? Or I don't want to, should I pay PMI? I could go on and on, but the questions were always similar when they did come out. So I started to just draft general articles, kind of self-serving, so I didn't have to keep typing over and over again. And I would attach the article and it'd be specific, maybe with their numbers. And I, kind of woke up one day and had 55 plus articles. And I was doing a lot of hiring at the time, and I felt I needed to create a training manual, because there's a lot of people, that want to get in this business.
Mhm.
And just because you're licensed and the DRE or the NMLS give you a license, they have no clue where to start or where to
Okay.
begin or how to price a loan. I mean, that license,
Yeah.
it
Well,
is what it is.
let's take a commercial break again. But I am interested in some of the stories that you have encountered doing your business, and I
Sure.
want people to really understand what impact you've done for these people. And so for everyone out there, don't go away. We are at the International Wealth Builders Radio Talk Show with Laleh Hanks, who is the real estate broker and also the founder and CEO of the America Choice Mortgage. So we will be right back. Stay with us.